Good morning, everyone, and welcome to the Quantum Leap Morning Leap, our pre-market homework session and trade plan set up for Friday, August the 21st, 2015, TGIF. My name is Doug McKay, and I am the founder of Quantum Leap and the head trader. If you want more information about our group, please contact me at quantumleaptrading@gmail.com or give me a call, 647-545-8065. Before we get going, I just need to get the disclaimer out of the way. This information is for the purpose of educating members who want to expand the knowledge of the business of trading. It's not for trading or investment advice. You and only you are responsible for the trades or investments decisions you make. Trading futures or any instrument involves risk loss. Please consider carefully whether futures or options are appropriate to your financial situation. Only risk capital should be used when trading futures or options. Investors could lose more than initial investment. Nobody at Quantum Leap is a certified trading advisor. We are retail traders operating within a self-organized learning environment. Past performance is not indicative of future results in any trades that you see in Quantum Leap are for education purposes only. Please trade your own plan and your own due diligence. Okay, so yesterday was a perfect example of two things. First of all, that good analysis pays off, but in some circumstances, sometimes your own analysis, you don't trade it, and when you don't do it and you don't trade it, you struggle. Yesterday, for weeks, we've been looking at this 2059, and anybody that would listen to me, I said if we broke 2059, that we'd get more price discovery, and we'd likely come down into this 2011.50 and retest the microcomposite VPOC of the previous balance area, the previous microcomposite that we broke out of in February. Well, yesterday, early morning, I got long at 59.50 and funded it at 60.50, and we ran up in the pre-market, and I thought, okay, we're going to get this retrace back up into the 77, 75 area, possibly up into the 79, 95, or 70, 75, 79, 75. It's been a long night, gang. Microcomposite VPOC from the July 22nd and on, and for some reason I got a long mindset that we were just going to dip down here, and I didn't take the short, and I should have got short and stayed short, and I didn't. I chopped around all day. I was able to gain some point, and then, being a fool, I took the 34 long. I think the last one I went 34 1/4 long, and then they flushed it into the close, and I got stuck. I was able to close that trade out at 27 1/4, and or was it 27 1/4 or 27.75? Anyway, I ended up with a scratch on the day. And thank goodness for the VWAP, and I'll show you why the VWAP saved me last night. And then I got short. I got short at 18.75 when we broke below this 19, and I was able to run it all the way down. And then I closed it out at the. I got the low of the day. I was amazed at myself at 2008.75. Tom and Scott and I were trading it, and I think Tom got out around 2011.50. I held on because I thought maybe we'd come down and test the lower side of that down at 2008.75, and I closed it out. Then the market gave me a great entry to the long side. Scott used the double Renko reverse. I mean, Scott used the Mr. Sneaky. I'll show you the Mr. Sneaky. I used the double Renko reversal, and I wrote it up to 21 1/4, and finally went to bed after that. The other thing that was good last night is on my gold trade, I was able to take a long. There was a, let me bring it up. There was a FUBAR Mr. Sneaky on gold. I know I'm not getting into the homework right away. I just want to give you a heads up. So I took this FUBAR Tech Gap Mr. Sneaky right here, kind of went against me, but I had lots to Theo, and then it rotated back up, and I was able to. I got in at 11:52.20, and on this bar right here, and then I closed it at 54.70, and that took off a good chunk of my profit. I'm now running 2 on gold. I've moved my stop up. Where's my gold chart? I've moved my stop up. My stop is now below the 11:29.20. I should have it a little bit lower. I should be using the 11:12.90 still, but I'm now in a matter of locking in profit. I've got close to $8,000 in profit on gold, and I gotta start locking it in. So I'm going to slowly move my stop up. If I don't, if I get stopped out before we get up into the main target up here at 1240, then so be it. I'm not going to let it come all the way back down. Also, for anybody that's still holding Nova Gold, we should be popping this morning. I'm expecting Nova Gold to open just over $5 in the Canadian, and I think we'll open up close to I think probably somewhere around 390, 385 on the U.S. That's the Nova Gold that we've been trading for years. Okay, let's get back to. Oh, I wanted to show you the Mr. Sneaky that we had. Mr. Sneaky. Where was it? It was way back here. This was the Mr. Sneaky that Scott was talking about. I took the double Renko reversal, but same thing. You could have taken the Mr. Sneaky bar and done it that way. And then we had that naked cross at I think it was 1450 or something like that. And we'll talk about this. Rick, there's going to be some terminology that you'll have to pick up. If you have any questions when I'm talking about anything in terms of the terminology, please don't be afraid to ask. That's what we're here for. We're here to learn together. Okay, so let's get our normal homework completed. First of all, we got to look at the weekly. So we've been looking at the possibility of this head and shoulder pattern setting up, and we had the neckline down here in around the 37 area, and we've completed the pattern now. Now that doesn't mean that we can't come back up and test it from below and even come back higher. There's some naked crosses above us right now that are likely going to get taken out today. And we could get a bit of a retrace. We had almost a 5% correction in the market, so that is normal, and we are seeing some weakness, and we have set up for the possibility. So we have to be on our toes with the probability that we could come down to test these measure moves. And I've got the 99.25. Basically, look at the 2000 level as the 38.2. Remember, these are estimates, not exact. And then 61.8 brings us down into the 1976. I'm looking at 75, and then the 100% takes us all the way down into that 1938. I'm looking at the 1937, and I'll show you why. But this is a reality now, or a probability, and we have to be aware of this as possible continuation lower. All right, so let's start with our normal routine, something I like to do every morning, and that's starting with the trends and seeing where we are within the different trends. Well, the monthly, we're getting our first break below the 9 EMA since this one right here. We're coming down and testing the 20 SMA on the monthly. That's going to take us down into the 1985 area and hit our first target of the head and shoulder at 99 if it sets up. We're losing slope, we're losing separation, so now we're seeing weakness coming in on the monthly. by the way, this is a 9 EMA and this is a 20 SMA. These are the two moving averages that I use on all my charts for those that are new. Going to the weekly, we just talked about the weekly. We have been in consolidation. We had the possible head and shoulder, and we've come down and validated the head and shoulder and showing some continued weakness. We are trading below the 9 and the 20 still. And going to the daily, you can see that the daily, we had this big drop. We do have slope and separation, but we have this technical gap. So it'll be nothing for us to rotate back up. I think we're going to come up and close this gap somewhere around the 51 level. But we have to wait to see whether or not we close this through time or close this through price or a combination of price and time. A tech gap, for those that are new, is when price action moves too far away from the 9 and creates a technical gap. Here's an example of it right here. It'll pull back, close the gap, and sometimes will lead to a much bigger move down or up, depending on which way the tech gap is. But we do have weakness in the daily. Going to the intraday so that we can check to see what the trends are coming in. You can see that again, we've got a very strong technical trend down right now, good slope, good separation, creating a technical gap. There's a possible flag formation on the 4-hour, so we got to watch that and look for possible breakout. We could probably even measure this as a flagpole measured move. I'm going to wait to see how it sets up, and if we break it to the low side, then I'll measure it to see what the measured move is. But we've got the measured move on the head and shoulders, so we can use that as well. But we do have a technical gap that needs to be closed. Excuse me for 1 second. All right, so the trend is down on the 4-hour. Going to the 30-minute, we've had this strong trend down through yesterday, and I showed this chart at the end of the day yesterday. Basically, when we rolled over and we failed to here's Thursday, yeah, okay. We failed to get back above the 9. We should have been paying attention to this trend down on the bigger picture. I don't know why I was trying to catch a falling knife yesterday. Here's a good example of a tech gap that is closed through time rather than through price. But in any event, we are in consolidation down here. I'm expecting some chop in this area. We'll take a look at that on the composite chart, but we are finding some consolidation here for possible rotation back up, but there's no trend right now on the 30-minute. And then on the 5-minute, same thing. We've got consolidation in this area. We had this little tech gap here, came up close to tech gap, and now we're going sideways. So no real trend coming into this market except that we have weakness coming in. I think people are going to be scared today. I think it's going to be quite rotational. I think we're going to tighten up. I don't think we're going to get a big range. The 20-day ATR continues to expand. Right now we're at 25.38. So based on the overnight high and the overnight low being 2008.75 plus your 20-day ATR at 25.38, our upside target on our ATR target is 20.34.25, and off of the high overnight, which was 20.29, our downside ATR target 25.38 is 2003.75. So those are our two daily ATR targets based on the expanding 20-day period range. Okay, so let's take a look at this again. We've already looked at it, but let's look at it more closely. So now we're back in this, microcomposite that runs from October the 30th through to the breakout day of February 5th. I don't know why. This keeps changing on me. Sorry, there it is right there. And you know, we came up here. We gapped up right here, accepted value just before we broke out, and then we broke out, and then we've been in this range and in this value area since February 5th with the value area high. It's 2107 and value area low 2060.50. We were using the 59 because I wanted to be below the CLVN and be out of the value area before I'd be thinking you know, a bigger move down. Did I ever think that we'd come down here and do it all in one day? I did not believe that. That's probably why I kept on trying to buy the different levels for a rotation back up. Anyway, it happens. That's trading. When, you know, if you ever see me doing that and you're seeing a trend setting up and I'm trying to buy rotations, you know, step up and tell me, hey, Doug, give your head a shake. You're trying to catch a falling knife. You know, use your own analysis and just get short. If we would have got short at 58.75 or 58 and a quarter, we could have held all day. You know, and overnight down all the way to that. It would have been a beautiful trade. Yet we don't always trade what we see. So we're in this area right now. Now a key line that we have to pay attention to now that we're in this value area is this value area high at 49. So we've got the CLVN at 49. We've got the value area high of the microcomposite that we're now inside of, so we have to pay attention to that. The other one is this one right here, which is a smaller microcomposite that I was trading off of when we were back here in January, so we've got to pay attention to the 19. So 19 CLVN and 49 CLVN are going to be a couple important levels for us. Of course, the important level below us is going to be this 20.0875, where our overnight high is and where we held. If we break below 20.0875, look for them to come down, test this lower level. Remember, our ATR target to the downside is 2003.75, just below the CHVN. I'd be using this 2004 and a quarter CHVN. And then the next big target is that microcomposite VPOC from the January microcomposite here at 0250. And then the key line in the sand for us is going to be to the low side is now going to be this 1997.50. We could dip into the 2000s, test them today, but if we break this 1997.50, then I'm looking for the bigger move down to that 75 area, 76, which is the measured move, the 100%, or the 61.8 measured move, which is down here at the 76 level. I'm looking at 75.75, like I said. Numbers in between there, you've got the 1887.75. You remember how important that is. That is the value area low of the microcomposite that we're now back into here. So 87.75, then 84.75 has some support, and then below that you get 79.50, 77.75, and 75.50. I don't think we'd get much lower than that today, but you never know. What my main hypothesis is, if we can get back above this 19 and hold 19 and leave this overnight low alone, is to go up and take out that that overnight high at 2029 and get a rotation, back in, to the prior day range. And I'm looking for, I'll be watching, the first target above is going to be 24.75, and then 26.75, and above 26.75, a move to the overnight high at 29 and up into the CHVN at 30. I think we could get as high as 36.75. Our ATR target to the upside is 20.34 and a quarter. I mean, we could get a big retrace back up, but I think it's going to be muted and it's going to be a grind. But if we can't get above 19, then I think we're going to get another rotation down and continue. We're going to open up outside of range and outside of value, so we got to look for initiative sellers stepping in and taking us back down into this 2011.50 area and take out the overnight low, and I think test the 2000 range. So, but we'll trade what we see as we get there. In terms of the big picture right now on the Renko, there's that 19. Okay, our overnight VPOC right now is sitting at 19. The Keltner center line is sitting at 1950. If we get above there, the test of the upper Keltner is going to take us into that 2475, that CHVN that I was just talking about. But if we fail to get below it, the move down will be to take out the naked closes. We did not take out some of these naked closes in the RTH, so they're still naked. So let's take a look at the overnight and start moving our numbers over. You've got the naked close still here at 15 1/4, 0375 and 0150. So our first trade area is going to be this 19. I'm actually going to use 1950. And anything below that, I'd be looking for a rotation down right now to the 15 1/4. We have a CLVN here at 1575 overnight. Our overnight value area low is 1475, but let's put our overnight numbers in. Our overnight low is at 0875. Our overnight high is up at 29. And our overnight VPOC is it 19 or is it 1875? 1875. And we're trading right there right now. And that's about all I really need off of the overnight. You got 13 1/4 as an LVN, but it's not that strong, and you've got 2250. I don't think we need anything like that. So let's just expand this out. Take a look at this. So below 19, our first target is going to be this 15 1/4 to take out the overnight low and come down here and test this 20.0875. Now this is right at a key CLVN. So this overnight low, I'm going to be just using the 20.08 level just below it as a trade level, because if we come down here to take out the overnight low, then I'm going to add on to a short or get short and into the first target for me is going to be 04 1/4, just in front of the naked close. And then of course trade level is going to be 2000 using the centennial number. Come on. And then below that, remember, we've got our 38% Fibonacci at 99, just below it. And I know that's probably a tight target, so you might even use the break of 0150, but I think it's got to be 2000 in my mind. And then below that, we've got the 97.75 or 97.50. You know what? I'm going to take this 2000 off. I think if you're already short, you just run it short. If you want to add below 2000 to accelerate it, I just think it's a tough area right here because you could come down, poke down into that 99 and then quickly rebound back up. So I think you should wait for another trade zone. And for those that are new, trade zones are targets, but they're also areas of execution. It's where we would add into a trade or enter a trade. I don't enter targets, okay, but trade the areas are targets as well. And then below 97.50, we've got nothing really below us until we get to this 87.75. And then just below that, we've got 84.75. And then below that, we've got 1978 and a quarter with that 77.75 CLVN just below it. So I'd be targeting the 78 and a quarter, but if you break, then I'm looking, and the big target is going to be down here. It's 76 on the fib extension, but I'm going to use the 75.50. And then just in case we really flush today, we've got the 69.50. And 66.50. We have to prepare ourselves what levels, even though I don't think we're going to get down here today. And then what's the big target below us? 44. Wow. Where does that come from? Oh, right down there at the bottom of the range here from November. Wow. So, and I think there's another fib target down at 1938 area. Actually, isn't that the 100%? Where's that? And just bring it back up here. I want to take another quick look at it. Where's my file? Oh, there it is. Yeah, 1930, 1938, 79. Okay. So that's those two things coincide with each other. 44. I was looking at the 37. Remember, it's 37 from way back here on this microcomposite. That was all the way back in, when was that? Whoops. Back in May of last year. Anyway, 1937 always sticks out in my head for some reason. All right, so let's take a look at our upside now. Sorry, I'm running long this morning, just lots to talk about. Above 19, you can use the 22 and a quarter as your first target, but really the big target is going to be the range low and that 24.75 CHVN. And then above that, look for them. We got the close at 25, the naked close at 25.50, and then the overnight low, high at 29. And you've got the 30 and a quarter. And then really nothing in this area until we get to that CHVN at 36.75. But if we get above 36.75, I think they'll go. There's a naked cross at, it's all the way up at 58. I thought it was at 41. But don't forget, we've got that 49. So we've got the value area at 41. And then we've got another key line in the sand for us now above, which is going to be this 49. Because that is now the value area high of the microcomposite. So we've got to be watching this, because if we get back above this 49, then I think we'll come up, take out the naked VPOC at 53, and we don't need this because that was the swing, and then come up and test this 59 level. Interesting, and I don't make this stuff up. Look at this. The key line in the sand, 59, is our value area high from yesterday. So you can see how important that level has become. And then above that, then I'd be looking for a move back up in to test the range high at 65 with the big target above at 66.75, and we're back into that triple distribution zone, up here between 66.75, 71 and a quarter, 75.50. And we've got the 70. There is a naked cross on the daily at 70, and it's right at that CHVN. So that's going to be another key area for us. And then above that, they can close at 72, 76, and then all our regular levels that we were watching above come into play. I don't think we're going to get back up there today. I think we're going to chop around in this area right here below 19, look for a rotational day down into that lower 2000s, possibly test these lower levels and take out these naked closes and bounce off a 19 or bounce off a 2000 or the 97.75. If we get above 19, then I'd be looking for a move to take out the range low and the overnight high. So we've got our overnight low down at 0875 and 29. I think 19 is the defining line between the 96, 97% probability of taking out the overnight high or overnight low. If we get above 19 and leave this overnight high or low, we grind up to 29 and take that out. If we fail to hold 19, or even if we go up and reject the 24.50 and then break back down below 19, then I think we take out the overnight high. Those are my two hypotheses. So I'm going to be very tight today. It's Friday. I had a good night overnight. I'm sluggish, so I'm only going to take the best opportunities. I'm not going to try to push trades today. So taking a quick look at gold. Gold right now, the 2-day balance is right here at the CLVN at 48.75. We're currently back up. I mean, wasn't that a beautiful target up here at 54, 55 area. Now we have to see if we can hold this 49. If we can't hold the 49, look for them to come down to the value area low for the 2 days and the CLVN at 43.10. Below that, I'd be looking for a move to come down and test this 29 again. And again, I've got my stop now moved up. I'm running my stop at 28.20 below the CLVN. If they take me out, I just don't want it to come all the way back down to the 16s, because if they come down to the 16s, I actually think they're going to come down and test this 1100 again. And then all my work on the swing trade is gone. So now I'm all about locking in profit and hanging on and hoping that we get continuation. The next target above, if we break above this 1160, look for them to test the value area high and the range high up here in the 65 to 68 level, and then a breakout of the 2-day continuation. Our next big target is up here at 78. And then we hopefully get a come up here, accept value here, and then continue up into the 1200s. That's what I'm looking at on gold. So that's going to complete our pre-market trade plan setup. As always, trade well, trade safe, and catch you on the flip side.